Hello, everyone. This is Terry with Futures.io, and as always, I would like to thank you for joining us today. It's my pleasure to welcome back Morad Askar, aka FuturesTrader71, for today's webinar, Are You Doing What It Takes to Trade Right? An AMA with FT71. Throughout the webinar, we have a question. Please feel free to type into the questions box, and we'll do our best to answer them throughout the event. This webinar will be recorded and posted on the Futures.io website within 24 to 48 hours. If you're watching afterwards on YouTube, please do us a favor and give us a thumbs up if you enjoyed the webinar. And as always, please feel free to share, comment, subscribe to our channel. It really helps us a lot. For trading news, events, and information, follow us on Facebook, YouTube, and Twitter using @FuturesIO. And now, without further delay, I'll hand it over to FT, and you'll get the pop-up to share your screen.
Sure. There we go.
Hi, looking good. She's all yours.
Excellent. Thanks everyone for joining. Hopefully you can hear me nice and clear. I want to remind everyone that I'll be sharing my opinion here. Derivatives trading involves substantial risk of loss, is not suitable for all investors. Past performance is not necessarily indicative of future results. Normally in an AMA, we just open it up and just take questions. A lot of times these questions, I've been doing AMAs with Futures.io for, I don't know, almost a decade, I think. And oftentimes they're the same questions. So I want to do something a little bit different this time. I want to just dive right into this topic of what does it take to be a professional trader, right? To trade right. So I'm going to take about 10 minutes to just cover this. There's no call to action here. These are just things I want you to consider. I'm really focused this year and making a push with regard to getting traders to move away from what they've already done that kind of repeats and repeats. And oftentimes traders find themselves in the same spot. So I'm making a push to make 2021 something different for those who want it to be different. So first of all, I want to talk about what are the key pieces that need to be in place to trade right. The Trade Right initiative and program are a part of Convergent Trading, and in it it was launched this Tuesday, and I'm actually shocked at the number of people who've jumped on. 250 plus members have jumped on and are doing the program there. And I'm sharing some of that with you, not to get you to join or anything like that, although I'd welcome that, but really to get you to think about what you're doing with your time as a trader. So what are the key pieces that need to be in place? These are the minimum pieces that must be laid out, thought out, written out, figured out in order to see yourself improving in a measurable way rather than feeling good about our trading. I've got some good months and bad months. Hey, I blew out a stop here, things like that. This is really in my effort to translate my prop trading and backing experience into something that's actionable for anybody who's willing to listen. So what are those pieces? The first piece is structure. You've got to have structure, something within which you operate as a business owner, much like I have to have a warehouse in order to put my manufacturing equipment in, or to put my inventory in that I can then sell. Structure is very important. This is part of, this is the first step towards business planning. This is part of one of the fundamental pieces you have to have in place in order to run your trading business. If you're here and you don't see your trading business as a business, then that's one of the first things you would want to address. The second thing that's key to this process is community and support. And a lot of that is offered up by Futures.io, huge member community, many journals, many features, many speakers, many webinars, many tools. So that's an important piece. The other piece is support, having someone that you can reach out to get support in terms of figuring things out, in terms of just being able to talk to vet out what you're feeling. A lot of time, and just say yes or say me. If you experience this, you're just surrounded by people who don't get it, right? Who don't understand what it's like to be a trader. It's a lot like wanting to be a professional, um, professional pilot or a professional race car driver. Unless you're immersed in that culture, which is what places like Chicago, New York, London, Frankfurt, Singapore, and so on offer. But most people are not at those places. They're isolated in their homes somewhere where their kids go to school or whatever their family is, and so the support structure is not there. Um, and support is a really important piece. So it's better to have a small group of people that you can really connect with, because trying to explain what you're going through to family members who in the first place feel that you're wasting your time is a very, very tough thing to do, in addition to battling the markets on a day-to-day basis. The other big piece is accountability. Having accountability is, if not the second, maybe the third most important thing that a prop shop offers. Prop shop offers what? It offers financing, capital, and structure. It offers access to other traders that create that community support, people you bounce things off of, motivation. But the key thing, one of the key things you can't get away from when you're at a prop, when you're in a prop situation, when you're truly being backed in a traditional way, is accountability. Because if we don't perform according to what we said we would, or we don't execute our plan, or we don't follow our risk rules, or whatever, you're going to hear it from someone. And if you hear it from someone enough, there's an opportunity cost to that institution, to that shop, where you will be replaced. And everybody knows that. I've watched people just without warning get told to take their hand off the mouse and the keyboard and pick up their stuff and walk to the front door. And that's that. It's just the accountability portion is really, really important. And because we don't have that when we're trading as an individual, we need to go find it through others. We need to look around and find other people that are going to hold us to account, so that we can hold them to account. Another trader, hopefully in a similar time zone, trading in a similar way, whose plan you understand, whose trading plan you understand, whose risk controls you understand, and then you can simply act as that backstop for them and that check against their actions, their execution versus what they say they'll do. The other part that's needed, the other piece that's needed to be in place is the standard stuff, the planning for your business targets, how you're going to use the time, how much time you have, how much capital you have, your trading plan, your risk plan, and your execution plan. So there you have it. Those are all the pieces: structure, community and support, accountability, and planning for trading, risk, and execution. And then following a webinar that I was a part of today with Dr. Andrew Menaker, a clinical psychologist and a trader, he added that actually part of your trading plan should include how you're going to manage your psychology, your emotions, and so forth. He says, he's told me before that this is something that is not often addressed as part of setting up the business. So I wanted to talk about those pieces and bring them to your attention. The second thing, the next part that I wanted to discuss as part of the topics here is how important is the technical side really? Show of hands. Who here thinks, just type yes in the questions in the chat box in front of you, who here thinks that having a technical edge is the most important thing that makes or breaks a trader? Let's see a show of hands. Come on. I'm sure all of you can participate here. Technical knowledge and an actual edge is the most important thing to have. The most important thing to have. So if you don't have an edge, you might as well go home. And if you have that edge, then that's all you need. That's the key thing that you need. Most of you, well, it's a mix, I would say. Looks like a couple of yeses, a lot of no's. Looks almost 50-50, maybe 60-40 towards a technical edge being the most important thing. I'm here to tell you, after 20 years of experience and a number of traders that I backed and what I see at Convergent Trading right now, there's far, far too much emphasis on the technical analysis side. If something doesn't work, it's because I don't have an edge. And it's because I haven't done enough homework. It's because I don't have the right system, the right tool, the right indicator. You know this, and I know this. Most people spend the majority of their time finding that edge, finding that piece, that little missing puzzle piece that's going to make them hundreds and hundreds of thousands of dollars if they can just crack it. They'll go out and buy books, they'll join education seminars and so on, and all of those address the technical side of things. One thing that Dr. Maneker said today, actually, he said the obstacle, and this is what the webinar was for, the obstacle to doing what you said you'll do, the obstacle to consistency is, the key obstacle to consistency is that traders tend to know that the I factor, or how I am the one that either makes or breaks my trading career. I am the one that is in charge. Every trader knows this. However, in his experience in working with hedge fund managers and traders of all kinds, in his experience, although most people know how important the psychology is and the I factor is, almost all will get immediately uncomfortable about uncovering the issues, and then will turn back towards their charts, towards their technical analysis, and towards their edge to solve the problem. And more often than not, that's not the problem. So how important is the technical side? It's important, but it does not merit the amount of attention and effort that most traders give it. Great, you got a new indicator that somebody created, awesome. But if your head isn't right, if you don't understand the emotional charge within you, if you don't understand how emotions are controlling or are causing you to respond to the market, then none of it matters. It really doesn't matter. So this is the key thing that we'd want to emphasize. And to manage the non-technical side requires accountability. It requires support. It requires these things. So that's where what I want to emphasize with this. The other thing is, look around. How many people do you know that have spent years going from one approach or education to another? Just moving through one method, one style, to going for options, then going to crypto, then coming back to futures, then doing equities because the commissions are free there, realizing that it's tough to compete there, coming back to futures, just going from one thing to the next, to the next, to the next. It's like this baggage that they accumulate at every stop and just pull around with them at every, from shop to shop to shop. That's the hunt for the technical side. It has limits. The market really is simple. It's hard to trade, but it's simple. And so the technical side is really not all that significant. Once you have something, for example, and an easy indication of this is how, if you followed a trading plan that you actually finally bothered to sit down and write out, if you follow it in a simulator, it operates properly. You make some money on it. It looks good. Once you go live, it all goes down the crapper. It just does not show any edge or anything, even though bar by bar studies on that method show that had you executed this without thought, then you would have seen the results. Many people make money on sim. They fall flat on their face when they go live, and that's because the technical side is not all that important, okay? Who are you accountable to? So with this, the aim here is to say, you know, it's cool at the beginning that, you know, you're getting to know trading and you're messing around, you're a few months in, no big deal. You're down, you know, on a $10,000 account, you may be down 10 or 20%. Ha ha, cool, fine. But here's the problem. When you get to the point where you're needing to get serious, now, because of the lack of accountability, we've picked up habits and processes that are working against us. And now we are so deep in, and without accountability, what we do is we just repeat the same mistakes again and again. So ask yourself, currently, right now, as you're trading day in, day out, what happens when you miss an objective or a target? Be that a goal for the week, be that a dollar amount, be that whatever it is. What happens? What's the consequence? Do you have a consequence? It's your trading account. You're trading it privately. Nobody gets your statements but you, unless you work for a financial company. So what happens when you miss an objective? What happens? I'm asking you. What happens? Are you awake? Hello? What happens? What do you do? What do you do when you miss your objective? You expected to make X dollars today. You did not. Do you tell anyone? Is there any accountability at all? What happens when you overstep your risk? You say you're going to risk $50 in the micros on this one trade. You lost 100. What happens? What's the consequence of that? Nothing? No? And you're expecting a change? Really? You want to change how you trade, but there's no consequence, there's no accountability? Good luck with that. What happens when we keep committing the same error again and again and again? We're trading, we're committing FOMO errors. We are over trading. We have planned out this trade and studied and did our homework and we did our prep and the market did what we expected, but we were too afraid to take the trade. That's an error. That's an error. You planned a trade and you did not trade the plan. That's an error. What happens when you do that? What happens? What's the consequence? You feel bad for a few moments. You rationalize what happened. Maybe you cuss yourself out. Maybe you hold yourself accountable for 5 seconds, but our mind is such that it seeks comfort, and so it forgets. And so accountability is really an important and a key piece. It's really, really important to find someone or something or some way to hold yourself accountable, right? And so that's one of the first things that slaps you in the face when you go and trade professionally, is that if you're not accountable, you're not going to stick around. Nobody's going to keep paying your desk fees and extending their leverage out and risk out to you if you're not performing and you're not accountable for how you perform. And then finally, is 2021 going to be the year for you? Time is the only thing that you cannot have more of and can't earn back. I can earn my losses back. I can remarry. I can buy a new house. I can buy another car. I can get a new phone if I drop mine, if I lost mine. But time, not really. So it begs the question, and I know this is not a popular thing. I know this is not a popular subject because I'm shining a light, as I do often on myself and feel bad about it. I'm shining a light on things that people like to avoid. I like the bliss of just showing up, pinging around with a one lot in the micros or doing some some stuff in the markets and then nobody knows about it. But my goal here is to make 2021 the year where you decide that you've spent enough time doing whatever you do, and it's time to really get more. You're worth it. You've earned it. You've put in the work. It's time to get something out of the effort and the expense of being a trader. So what are you waiting for? What will it take to break through? Okay, so that's what I wanted to discuss today. I know this is some heavy stuff. I know I'm not leaving you with actionable steps or whatever. It's a deeper subject than we have time for here. But I wanted to, I'm doing whatever I can to make sure that traders are taking the right steps or doing something to perform better. You know, if I asked you for your performance so far in the last year because I want to back you, what am I going to get? And if it's not something that's worthy of your effort, why not? And when are you going to fix it? When are you going to do it in a way that is worthy for me to back you? And if it's not good enough for me to back you, then why is it not good? Why is it good enough for you, right? Individually. I know these are tough questions, a tough subject, but this is not why we're here. So I went over my time. Let's flip it into an AMA, and really I'd prefer to address questions relating to this issue if you have it. I'm happy to answer other questions as well, but I really want to get you to think critically about what you're doing and what steps you're taking and how you're spending your time. Do we have any questions? Or did I just blow you all away? Okay, so the question, with these new market conditions, being a new trader with only 6 months of trading experience, how long do you think it takes for someone to start getting on the right track to become a successful and consistent trader? Excellent. The answer, unfortunately, is it depends. I guess one way to look at this is, I'm sure most everyone here knows how to ride a bike. I'm guessing. Most people know how to ride a bicycle. What the process for most people when they're learning to trade is they see a bike, they see someone riding, or they hear how much fun it is to ride. They hear they can make money riding a bike. And then they go and they study bikes, and they get their first bike, and then they look at it, they stare at it, they put it on a stand, and they pedal without it falling over because it's being held by a stand, and so on and so forth. The question is, if the question is, well, how soon can I do the Tour de France, you know, go compete against professionals bike riding, although in our business you don't have to be at that level, you just have to be somewhere in the middle. You don't have to be at the top. The question is, how are you practicing? How often are you taking the bike out? How often are you pushing the limits? How are you tracking your results? Are you accountable to someone so that if you keep repeating the same thing, this person is trusted enough and honest enough to hold your feet to it? That's what yields results. I mean, if you come into this, just change your mindset to think, if I was working for someone else and I'm doing what I do on a daily basis, would they keep me there as an employee trader? If not, why not? What do I need to do to change that? So the function of, can I learn in 6 months? I'll tell you this, historically, past performance is not necessarily indicative of future results. When I was backing people, I put 25 grand up. In about 3 to 4 months, they will have experienced their drawdown and will have experienced their max drawdown. They will have probably drawn down the account to anywhere between 18 and 18 to 20,000 they would have lost at that point. By about 6 to 9 months, they are normally back, and they're normally getting something within 9 months to a year, getting an actual paycheck from, not from their draw, but from their actual earnings. And that's under a very focused kind of, hey, get off your ass and do what you need to do, cut your losers, let your winners run type of thing every day. And this is high volume scalping type of environment where you have many trades. At that point, they will have done, tens of thousands of trades, I would guess. And so that's the kind of environment you need to create for yourself. Do you have to be under that environment to make money? Am I saying you have no chance? No, I'm not saying that. I see people within Convergent or EdgeClear or others who do okay, who actually are making money. Again, past performance is not necessarily indicative, but I see a lot more people who just kind of, they don't take it seriously. They're doing the best they can, but they're not taking it seriously. So the question of how long does it take is really a function of how much are you willing to commit, how much are you willing to put in. And by the way, everything I put up here today is about commitment. This is what's missing. It's all about committing to getting it done. Okay. Let's see if I can fish out another question. I've been trading for 15 years, blew out accounts every year. Now, how long before I become successful? That's a joke, I guess. If a method's expectancy ebbs and flows as conditions change, how do you know when your edge is gone versus you are just in a statistical drawdown? What do you do when it seems like your edge has disappeared? For one, your edge generally doesn't disappear overnight. It depends on what you're doing. Okay, so if you're doing a stat arb and somebody comes in and does it for, does it in 8 milliseconds and you're connected across an entire country, yes, your edge will be gone instantaneously. But for most of us, that's not the case. For most of us, the market regime dictates how our edge works. And so there are periods of time when the market regime is not favorable. For me personally, the current market regime is not favorable. I'm not trading much at all because new all-time highs on trend days, not my gig. I'm not comfortable because I'm an auction trader. I'm not comfortable sticking my neck out there buying the new all-time high and with no clear definition of what my risk versus reward is. It's just not my thing. For other people, this is their thing, right? This is, hey, just buy anything and you'll make money. So with that understanding, I understand that if I continue to trade in this environment, I'll probably experience a drawdown. An edge is blunted over time. If your edge is based on true, like robust and true market pillars or a strong market foundation, you don't have to worry about your edge disappearing. I've been trading using the same method for about 15 years. The market's going to do what it's going to do, and it follows certain habits and roles. As long as humans are in the market, and that's what really moves the market, it's not the machines. The machines just execute. As long as humans are in the market, the principles of mass psychology, the auction process, all of that follows the same path. And in general, we can see where there's interest in the market. This is why I use volume profiling. But even if you use something else like fib retracements or whatever, I don't really adjust how I trade because I'm just looking at the auction. But for someone who's relying on a moving average crossover, there may be situations where the volatility drops enough or changes enough that moving average crossover is too slow or something like that. And so the edge is blunted. So it's really a function of how you trade. But in general, you're getting in my experience, you get a lot of preview, you get a lot of time before the market uh, stops paying out on a specific edge. And that speaks to how robust our approach is to that specific market. How did you start developing your business plan? It's really, for me personally, I mean, I moved from Florida, from being a SOS bandit in Florida to Chicago in the middle of January, actually January 18th. I moved to Chicago and I was still wearing basketball shorts because I had no clue that it would be like 32 below. My way of getting introduced to a business plan is I had to, once I was fired from the prop shop that I was working at, the futures prop shop and the board of trade I was working at, I spent 2 months shopping around for clearing and trying to figure out, and my goal is to figure out what I'm going to do to trade. And I did not want to trade because I was profitable at the time. I did not want to trade for someone else. So I had to sit down and write what it would take for me to be a profitable trader and running a business as an entrepreneur. And in addition to that, because there was so much interest in leaving that prop shop and doing something else, I wrote down a plan for what it would take to back other people out of that other firm. So that's where my business planning started. Look, I hate to sound like I'm peddling something, but I put all that down in the as part of the Trade Right program at Convergent. It's hard for me to go over it, but the business plan includes things like, why are you doing this? What is your objective? Imagine going out and asking for a loan from a bank. What will they want to know to have a really good idea of whether or not they should invest in you? You're investing in yourself. So put that in your business plan. Things like, where am I going to be trading? What are the times? How much time am I going to give myself? How is the money going to be spent? How do I pay for the data feeds and software and all that stuff? What is that going to cost? Project that out. Look at the big picture, and make sure it's in line with your financial situation and the time you can invest in it. You know, if you only have an hour a day to trade, you're going to have a business plan that lays out a much longer time frame. You have to have a business plan that looks at which products you can trade during that hour that actually move. You know, if that hour is between 8 a.m. and 9 a.m. Eastern time, well, that's not you might need to become really good at trading numbers, the 8:30 numbers, and that's it. That's all you get exposure to. So studying what happens after lunch or whatever is not really relevant to you. So that's all outlined in your business plan. Ideally, you have someone else look at it. Anyway, hope that helps. But there's a lot that goes into the business plan. It really breaks down. I mean, look at just general business planning, and you'll see that there's a lot you need to think through. You need to take this seriously. This is a business, because the people you're going up against every day and competing against, they're running a business and they're serious about it. The other people listening and the other people at Futures.io, they're running a business. Those who are making money and who've been doing this, the wizards who've been doing this a while, they're running a business and you're competing against them. What's a good consequence when you don't meet your goal at the end of the week? Well, it's the consequence. The consequence is built in. You didn't meet your goal. You didn't make money. You wasted another week. The question is, what are you going to do different? That's really what you're after. That's the accountability part. What are you going to do differently that would improve that? So the reason you didn't meet your goal is, one, out of your control, meaning the market did not yield any opportunity. It's rollover week. Market's waiting for some big election, whatever. There wasn't much opportunity. And that you can't control. The second, the rest of them, though, are quite in your control. And so the question is, what is it that caused you not to meet your goal? I mean, at the end of the day, you're still going to show up on Sunday, look at your performance last week, and you're going to set your expectancy or your expected goal based on last week. You know, if I lost $2,000 this week, it doesn't mean crap to me or anyone else if I say, well, this week is going to be the week where I make 10 grand. No, that's not a good goal. The goal has to be set based on where you stand, not where you think you should be. So next week, it might be, look, I'm going to break even. I'm looking to break even this week. My goal is to take the trades, take the setups, but still break even. Just let them play out. But in addition to that, here are the errors. I keep getting into trades, closing them out too soon unless they go against me. Then I hold on, and I've extended my stops, and that's why I lost $2,000 this last week. Things like that. That's the accountability part. And if the same reason shows up week after week after week, you want to have someone there telling you, hey, bozo, stop doing this, because explaining the same silly thing week in, week out, it just doesn't feel good. So you're incentivized to change it. But if you're accountable to just yourself, that's easy to do. It's easy to just keep doing the same thing and explaining it away. Technical is not the most important piece, but it's essential, isn't it? Are there as many edges there are Twitter gurus, furus? I didn't say that the technical side is not important. Okay, that's not what I said. But if you follow a trader around and you watched where their investment mainly lies, you'll find that it's in the technical side. They're looking to back test and get an optimized moving average, or they're looking to get a better indicator. They're looking for a faster computer. They're looking for a faster connection. They're looking to trade the golden ratio this week rather than something else. It's constantly outside ourselves. But that's not where it's at, because like Richard Dennis said in the first Market Wizards about the turtles, one of the most successful trading experiments we know of. He said, if I took out a full page ad in the Wall Street Journal laying out the rules that we give to the turtles who are wildly successful. I don't remember it's been like 20 years since I read the book, but it's something like almost all of them would lose money, even if I just laid out what it is that we did. And it's as simple as something that I can write on the back of a napkin. Almost all the people who try to do it will lose money. And that's still a fact. Why is it still a fact 20 years later? It's because humans are humans. We're the same. We're not equipped, we're not organized. Our brain and emotional system is not organized to trade. We have to learn to trade. Just like we have to learn to, I don't know, click a mouse or ride a bicycle or whatever, things that are not naturally there, but we learn them. So that's the side that needs work, right? You can find an edge. I'm sure you can find an edge. There are many gurus, and I can't speak to gurus. I don't know what's real and what's not, but pretty much everything works and nothing works at the same time. And the problem is the person clicking the mouse most of the time. Okay, just wait too long for information, so you're taking price risk for more information, so you're getting crappy prices farther from your stop. You don't want to miss out, so you're FOMO trading because you need to trade. You plan things out and didn't take them because you're just afraid of losing, which is a huge problem for traders. And I've talked about this in the past. Like, I think I did a webinar on this. What is this thing about being afraid to lose? It's part of the process. So there are many edges. I mean, the market's full of edges, people. It's full of edges. It's the discipline behind executing that edge that's really, that requires some gut-wrenching work and uncomfortable work, okay? How do I find an edge that fits me? Can Convergent help with that? No, I don't. You know, even with my prop traders, I have never sat down with a prop trader and said, hey, look, here's when you buy, and here's where you put your stop, and here's your target. I've never done that. Never done that. And these guys were profitable. It's why would I do that? Why would I do that? Why is my view of the market the only view that people should know? No, my attention is on organizing the information and helping them see through the market so that they can apply their biases, their view. Why am I hiring someone to trade? The idea behind a prop shop is to diversify my trading. Why? Selfish. Because if I don't have other people trading my money, then I have to click. And I don't want to click. I don't want to click. You know, I don't want to not make money when when I go on vacation. I have to pay for the vacation, and then I have to pay the opportunity cost of not sitting at my desk and trading. And this is coming from a divorced guy. I used to trade come hell or high water. You know, it's not a good thing. So the process of hiring other people is to diversify my exposure and get more out of the market. And I'm not going to do that by just having everybody do the same thing and multiply what I'm doing. That's not the process that I'm after. What I'm after is for everybody to come in and have their own imprint and do their own approach and come up with their own creative idea on what to trade and how to trade it. There are guys that are back that trade the notes. At the time, the thing was moving 5 ticks on a day, but they still made money, right? It's just trade a lot of size, or they do a spread or whatever. And so to me, it's not about teaching people how to trade. I think that's the wrong. If you go and pay someone who teach you how to trade exactly, something is wrong, because you're bringing your own view on things. Some people are more analytical, mathematical. Some people are more visual, right? They want to see stuff. They have to have a ribbon on their chart to see what price is doing. Some people want to strip a chart down. Heck, most of my guys didn't even use charts. We had CQG integrated client for everybody at $850 a month. Hardly anybody used it. Really, I think the first guy I backed used it. So he traded off of fibs and things like that. In the Dow, I used it because I was trading multiple markets and I'm more of a statistically based trader, but most guys didn't even use it. So you want to promote that, the ability to come in and do your own thing. So it's not about, hey, can someone give me an edge? But if I help you with the structure of the market and I help you understand that these are habits, the market's made up of people, like it or not. These are habits, and the habit of the market is to perform these things, but it's random, but we don't know the outcome of the next trade. It may be wrong. What I just explained to you may be wrong this one time, but over a large series of trades and a large sample, this is what's likely to happen. Okay, so this is a different attitude. Anyway, what do you see? Let me see. I don't want to skip questions here. Where do you get this prop type accountability when it's just you and a mouse? You can do it through relationships. I mean, it's one of the key elements of convergent trading. You can get it from a prop shop, a proper prop shop, not what we think are prop shops. It's about people. It's being connected to other people. I mean, can you start a thread on FIO asking for accountability? Have you started a journal? Do you journal? Do you track? Do you have a trading log with a journal attached that rates and discusses how you traded versus how you expected? Without those things, nobody can help you be accountable because you're not doing the work, right? What do you see as the easiest way to overcome fear of execution? I'm looking for confirmation of the zone or trade, and after it does move in my favor, I feel I've missed the low risk opportunity, then I chase the market. Okay, so this is, I did a webinar on this called Price versus Information Risk. The issue with execution, I think somebody else asked this question. I know it's a common, it's a pest, this issue, and it boils down to the fact that most people don't like to lose because they believe that losing makes you wrong. This is a very tough attitude to have. Losing is not wrong. Losing is not wrong. It's just think for a second. Let's say that you needed to, there's a finite number of something, COVID tests. Given the environment that we're in, this is going to be a crazy analogy, but think of like the number of appointments where you can go and get a COVID test, right? Your local clinic or whatever, local COVID test center has so many slots, and the phones open up or the system turns on at 8 a.m. and you need to go and get your slot. If you did not get a slot, you lost. Do you blame yourself? Is that bad? Is that a bad thing? It's not a bad thing unless you really, really need to get a test done. But if you're doing this, if it happens that there aren't opportunities there and you lost, then it's just a loss. Tomorrow morning at 8 a.m., you'll call again without any attachment to the fact that, yes, you're not going to try to dial your phone differently tomorrow, are you? You're not going to try your other smartphone. You're not going to go to your office and try that line. You're not going to ask people how quickly they dial and which finger they used, are you? That's what traders spend their time on. Tomorrow, you're going to show up and you're going to just call. That's it. Maybe you can get an edge by pre-programming the number to one button that you can press or something to get an edge that way. But it's just a loss. It's just a loss. It's a requirement. The loss is a requirement to trading. So don't try to avoid the loss, because if your effort is avoiding the loss, it is the thing that will meet you. It's the thing that you're promoting. It's like the law of attraction. If I'm sitting here trying to avoid something really badly, then I'm likely going to collide with it. An example of this is if I'm concerned about my relationship with my partner and all I can think of is how not to have them break up with me, then I'm not focused on the things that help the relationship. I'm just focused on not losing that person. So I'm going to act in a way that is most likely going to help them think that I'm not the right person, that I should be left. I know these are silly analogies, but you got to let go of the loss. Focus on why the trade should work, and more importantly, what should you get paid versus the risk. If you can get the R factor, the risk reward, if you can get that on your side, then statistically it is hard to flame out or take a huge loss or anything like that. You know, if you keep your trades to 1.5 or 2R or something like that, statistically speaking, it is much, much harder to lose the equity in your account. So in that situation, your job is just to focus on, what's my bias? Given the information that the market's giving me, what's my bias? Long or short? Long, okay, cool. If I was to get long, what gives me an edge? For how much cost? So how much am I willing to pay to exploit a long to my profit target? Period. That's it. All the other stuff is bullshit. It really it's just adding sizzle. It's all it is. You know, order flow, that gets you to pinpoint your entries a little bit better than somebody who just says, bloop, go to market, I don't care. Because your time horizon's big enough that it doesn't matter. You're not sitting there intertwined with the very next tick. But it should, at the end of the day, your goal is to eliminate the side that you don't want to participate in. Look, if your plan says the market pulls back, if it holds this area, then it's likely to go higher by 10 points. You should not be looking for shorts. You've just eliminated half of the problem. So you're just looking for longs. And the next question is going to be, where can I get long at a cost low enough for the return, for the target, that gives me an advantage? So does it have to be a 6-tick stop? Does it have to be a 10-tick stop? It doesn't matter. It needs to be big enough that you're not getting caught in the wash or in the noise. But if I'm going to take a 3-point stop, then I need to make sure that my target is likely to be 6 points or better. And if I'm looking at the bias and I'm looking at the cost of trading, that's your stop to sample the trade, versus a target, then that takes care of, it doesn't mean that you'll be profitable, but it takes care of a huge bundle of it. Okay? And so when people are in the flow, if you ever watch a trader that's in the flow, they're not thinking about all that stuff. They're not thinking much at all. They just see it, they do it. They see it, they do it. So the fear of loss is just creating this huge bottleneck between you and the flow of the market. And your job is to trade the flow of the market. The market's ebbing and flowing, and it's moving up and down, up and down, up and down. Our goal is to align ourselves with the next swing and take a shot, take a bet with a reasonable stop for a good, strong target. And then that's it. We're not attached to whether or not the economy's better or who's president or all this nonsense. We're not attached to that. It doesn't matter. I'm just trading the swings of the market, or I'm trading my moving average crossover or my CCI, RSI, whatever it is. Your focus is to stay in a flow of it. And if you're staying in a flow of it, then you don't need more information. You just need to understand, okay, I'm just looking long here. Okay, this has pulled back far enough. The long's still valid. I'm just getting in here because I'm risking 2 points and I'm looking for 4. And if it runs and I can get 8, awesome. If not, then I've got my 4 and I've got my risk. And I'm not attached to not losing. So I'm going to take my stop if it gets to 2 points against me. That's it. So if you're trying to avoid, if your goal is to avoid stops, you will get more stops, because your behavior is going to be such that you will not let the winner run. As soon as it shows a little bit of gain, boom, you close it. Made a point. Okay, I'm not going to trade anymore for the rest of the day. I made a point right now and I'm done. That's not sustainable trading. Okay, so don't avoid the loss. Just accept that this is how much it'll cost for you to get your target, and your job is to align yourself to the best you can to the flow of the market in the moment. Okay, so that addresses the question again: how to overcome the fear of pulling the trigger. The fear of pulling the trigger is simply attached to the need to be right and the need to not risk your money. Your money's there to work for you when you trade, just like it is in an investment. You can lose buying an ETF. You can lose buying a mutual fund. Why aren't you worried about that? Why aren't you timing that? Instead, you're just adding to your 401k with every paycheck. You don't care, and the edge is on your side. The historical edge is on your side. So you just keep investing and going. So trading needs to flow a little bit better. Stop worrying about the loss, because that's what's stimulating the fear. And by the way, when there's fear, don't just say I'm going to trade unemotionally. That's like holding your breath. It's a matter of time before you either pass out and start breathing again, or you'll just breathe again and you'll breathe hard. So just just recognize the emotion, recognize that, hey, I know I need to do this, but I'm scared and I just need to separate that from the market. My emotions are there. I acknowledge them. I respect them. I honor them, but they have nothing to do with what the market's doing. Nothing. Market does not care about your emotions. So why am I bringing that into the equation? Could you please speak about how important it is for newer traders to have an understanding of what kind of trader they want to be? This is usually a very difficult question for new traders to answer, and a very important one in my opinion. That is exactly right. What is it that you're after? If what kind of a trader is it that you're seeking to be? Are you going to be someone who is intraday trading for a certain amount of activity for a certain amount of time, and you're looking for constant flow? Are you someone who's taking big swings, puts in more money? What are you looking to be? That's part of your business plan. That's one of the key things you identify as in the objective statement of your business plan. It's important for you to understand who you are. Also, it's really, really important for you to understand your time frame. Because if you don't understand your time frame, and if you don't understand your time frame, and you're bouncing around time frames, and you're having conversations with other people who have different time frames, that is a very confusing thing. Because you may be hearing of this guy who's on a hot streak and they're just making a ton of money going long, and you're sitting here going long and losing money. The time frame is not. The time frame could be a part of the issue, not just your own psychology or issues like that. So understand the time frame you're trading in, understand what segment of the business you're going to participate in. Are you competing at a very low time frame against HFTs and now order flow is like God to you? That's different than a person who's trading structure on a 15-minute chart, or somebody who's doing market profile and is waiting for the next 30-minute bracket to come to an end or whatever. Where can I find an edge that I can depend on? You find the edge in your understanding of the market. It is not out there on a website. It is definitely not in a book. It is not in some guru class. It's nothing like that. Where you find your edge is in your understanding of the market. How many, we're running out of time, but I've got to throw this at you. How many have seen, or be honest, have bought those books that tell you how to pick up a female at a bar, how to attract a female at a bar or whatever? How many of you have done that? Come on, be honest. Be honest. We're really shining the light today. You know, those books on how to be an awesome pickup artist or whatever. It's you read a book and it's like, oh, but if you do this, and if she swishes her hair this way, or what? My wife is a therapist, and we talk about this quite a bit. She's a couples and a couples therapist and a sex therapist, and it's incredible. What you read these books and you go out and you spit out this line at a bar, and you look like an idiot, right? And that's somebody who's constantly seeking an edge from others. How about you understand human relationships, how humans operate? How about you understand what people want? How about you understand just being human? That's what I'm focused on. I'm focused on helping someone understand what makes the market move, how it operates. Then how you approach is your thing. The edge is a result of, is a consequence of your understanding, your true understanding of the market. You know, these the Renaissance fund, you know, how they make these ridiculous amounts of money. They have an enormous understanding of the market, huge understanding of the market, and they're able to exploit it. It's not moving averages, it's not indicators, it's what makes the market shift and move, and when it doesn't do what you expect. That's important information. It's really important information, because it's now telling you something a little bit more. And that could cause a stop. And it's not some slap against you. It's just a stop. It's just a stop. I think we're over our time. I actually need to run off, but I'm really working hard here to help you make 2021 count. So instead of coming on and answering questions about what an opening swing is and what a low volume node is or whatever, I think that that's overdone. And I think that you can find out about that in many different places. But I think what happens with people is we're not looking at the more important stuff, the stuff that I'm seeking out in a trader when I go and hire the next prop trader. I'm looking for somebody who's got grit, for somebody who's going to put in the work, for somebody who's achieving, believes in themselves. Those are the qualities that I'm looking for. I'm looking for somebody who doesn't have a fixed mindset. Oh, I was born this way. I'm kind of stupid. I'm kind of impulsive and I'm just not an analytical person. I just like the flow. No, you're not born that way. That's a fixed mindset. I want to hear that you will learn what you need to learn. You will, if somebody else can do it, I can do it. If somebody says, hey, this is what you need, I will get it done. That's what I want. Somebody who's able to just outlast the excuses and the lack of discipline and the disconnect from their emotional intelligence, things like that. Okay. I hope I've helped you in some small way today. You can reach me at, FuturesTrader71.com is pretty much quiet. You can reach me at conversiontrading.com or, of course, through edgeclear.com. And I'm hoping that you will listen to this more than once, and maybe I struck a chord with you, and you will take the time to create those pieces that I talked about back here, the key pieces. Okay? Good luck, and I'll talk to you soon. Thanks, Terry, for having me on.
Absolutely. Thank you for the information and for spending some time with us this evening.
Cheers. Take care.